LeBeau. Welcome back to the Fourth Revolution, where I discuss stocks for your portfolio of the future. And we are in the most unprecedented trading environment we've seen in decades. And freshmen and senior traders are learning, trying to grasp this market equally with the remote trading, ultra low interest rates, as well as this ease of market entry that we have never seen before. Robinhood, as I've discussed in the past, has democratized the financial markets, and it's creating a whole band of new retail investors who are a little bit angsty, a little bit stir crazy, sitting in their homes and have a little bit more fun money, so to speak. And they have been playing it to the nth degree with GameStop, pushing that to unbelievable levels. But that house of cards has unfortunately fallen apart. And you know what? It was about time. Ja Rule, somebody who seemed like they hadn't seen or had never owned a stock before a couple weeks ago, was on CNBC giving financial advice to these retail investors. And it's like, Ja Rule is on CNBC. What is happening to the financial markets? It's falling apart. And it really seems like fundamentals are out the window as well as technicals. So let's take a look at some of the charts that have just gone haywire and where the markets are at right now. We're really frothy as far as valuation goes, but we could still head higher with this fresh infusion of capital from retail investors and further stimulus from this blue wave in the government. This is the NASDAQ 100, and since the end of January, it seems like we've kind of topped off. We've had some tremendous earnings from the biggest companies in the market. We got Apple, Google, Facebook, Microsoft, and Amazon all illustrating wonderful earnings. And, the market just is selling off. Every single time we had a big earning from Apple and Microsoft, they were pulling profits. They were buying the rumors of good earnings, and then when the good earnings actually came to fruition, they sold the news. So what the trade I've been making recently, as we ostensibly top out here, I've been trading QQQ puts. This is a NASDAQ 100. The QQQ is Invesco's ETF. And every single time the RSI here, Relative Strength Index, hits 70, and it's usually an intraday 70, the whole thing sells off, which you can see here. It happened on the first day of trading, January 4th. Happened again up here at January 25th. We had a top out at 70 intraday, and it just sold off immediately the next day. Same thing happened, even a bigger one. It was a 2-day sell-off. And we're not quite hitting those levels yet, but I am still trading puts on the implication that we are headed towards some kind of correction. So this is the chart that I've been trading off of. Give you a better view here with the 15-minute. And you can see we hit our highs right after Martin Luther King Day here, kind of just flopping around. Not a lot of activity, and hit him again. What is this, yesterday, and fell back down. So I think that we are in a place where I would not be chasing the rally. This is an opportunity to hold your cash and wait for the pullback. I've been hearing from analysts across the board, they're expecting anywhere between a 10 to 15% pullback at any day now. And with the earnings already coming in, we got more than 50% of the S&P 500, pretty much all of the major big tech names coming out. I think that this is a time to hold. So here is the GameStop trade. We've all been hearing about this in the news. This has been on every single news story. You can't even watch CNBC for 5 minutes without the GameStop chart, showing up on the page. And I was just going to break down a little bit of what happened here. So obviously it began with the short squeeze. There was an over 140% short interest on this stock, which is something that's mechanically wrong with the market. That should never be able to happen. But nonetheless, it happened, and we shot up from under $20 a share all the way up to what are we? Thousands of percents. I think this was like over 1,700% at its high. And this was a trade that was driven by Wall Street Bets, a Reddit message board, and it's people that were trying to, AKA, stick it to the man. And I think it was more of people just trying to get rich quick and losing out on it. People were putting way too much money on the line here as well. You see people putting their mortgages on the line and, more money that they can really afford to lose. And it's really sad, honestly, to see a lot of these people buying the peak here and just seeing the returns just plummet, losing most of their money. I mean, if you bought up here at, even 400, you've lost over 75% of your capital. And this stock is not going back up. This trade is over. This is, that you read Wall Street Bets and they're saying that there's market manipulation going on for the downside. But no, I mean, it was market manipulation on the upside. This stock should have never been trading at 480 or anywhere close to that. Even $77 a share right now is too high fundamentally for the market. And, this is just another example of the frothiness and excess that we have in the financial markets today. Gamma squeeze was another reason that this was shot up. The gamma squeeze is when option holders, usually market makers, are forced to buy more shares on the way up as their out of the money calls get closer into the money and deeper into the money, which raises their delta, which increases the amount of shares that these market makers need to hedge their position. But the unfortunate thing is that on the way down, this happens even faster the other way. So these market makers are unloading shares, which magnifies the effect of the sell-off. The markets are getting a little stretched right now. I think that we could be hitting a temporary top with big earnings already coming out and the market's not really moving to the upside after these tremendous beats across the board and promising future earnings. I think inflation's starting to become a concern, and interest rates are on the way up, which is going to discount these stocks back and sober the market up to reality, which is, like I said, a 10 to 15% pullback. So I'm trading QQQ puts for my tech-heavy portfolio, and if your portfolio is a little more diversified, I would consider checking out SPY puts for a broader market hedge. And this is going to be important to protect the gains that you've had since the March lows, which I'm sure are sizable. And you don't want to miss out on smoothing out the transition into this correction. So I'm launching the Headline Trader in the coming weeks here. It's going to launch February 16th, the day after President's Day. And it's going to be taking advantage of all these quick market moves in this rapidly evolving market. So check that out at Zacks.com/promo next week. This week's promotion is the election trade and how to take advantage of that. So check that out again at Zacks.com/promo. So thanks for watching, guys. Look forward to talking to you guys next time.